the IRS get abolished, there's actually some major tax cuts being made currently with the government, and the government is currently really cracking down on spending and cutting a lot of different programs. And when it comes to any sort of tax reform and any sort of tax changes, there's going to be people that benefit from it and people that are hurt from it. And it comes down really to these two things. There's going to be people that are uninformed on the changes in the tax code, and there's going to be people that are informed in the changes in the tax code. And the people that are uninformed are going to get hurt by it, and the people that are informed will be able to exploit and take it to their advantage. If you're new to my channel, my name is Pascal. I've been in the financial services space for over 8 years, helping people with life, health, and retirement. So if you're interested in content like this, learning more about tax advantages and how to plan properly, make sure you stay tuned. But in this particular video, I'm going to be talking a lot in terms of the new tax changes that have been made and how it's going to affect you and the everyday person. This year, we've collected over $200 billion in terms of total tariff revenue. So that's actually the most amount of tariff revenue we've collected in decades. But the problem is we currently collect about 2.4 trillion every single year in terms of total income tax that comes in. So there's still a decent discrepancy between the amount of tariff revenue we're getting and the current amount of total income taxes that we collect. And also, with all the total taxes that we collect in terms of sales tax, income taxes, and all those different types of taxes, we collect about $5 trillion every single year. And we spend currently $7 trillion. So there's still a massive deficit in terms of what we bring in versus what we spend. What most people are concerned about is how is this actually going to affect their day-to-day life as a day-to-day person, right? And there's 6 main taxes you have to be concerned about going into the future. And I'm going to go over them on the whiteboard. If you're a business owner, make sure you keep watching this video because I'm going to go over some major changes that are going to happen in the tax code that's going to be very beneficial for you. And this is going to be the same if you're self-employed, right? But the 6 main taxes for most individuals is going to be income tax that they're probably going to be concerned about. This is basically when you earn income, you work a job, you have a business or whatever it is, you get paid a certain amount of income, and then you get federal, state, and local deducted, right? Sales tax is going to be basically when you buy a good or service and you're going to have a certain tax associated with that. Payroll taxes are going to be your FICA taxes. So that's going to basically be your Social Security, Medicaid, things of that sort, right? And then we have capital gains taxes. So if you have a real estate property or a real estate investment and you go ahead and sell it, or you have a stock portfolio or a stock option or whatever it is and you liquidate it, you pay a certain capital gains, whether it's short-term or long-term capital gains. And then there's property taxes. Basically, if you own a real estate property, there's a certain percentage that you're going to be paying in taxes, which is obviously going to vary state by state, depending on the state you're in. There's a certain amount of property tax that are associated with the property that you own. And then lastly, which we've been talking about all today, right, is the tariff taxes. So it's not going to be a tax that you directly pay out of pocket, but likely when it comes to foreign imports and different goods, those goods might be more expensive. So there might be a higher cost to buying non-American goods. So now that we went over different types of taxes and how it's going to affect you, right? Well, let's go over the government strategy, right? There's only 2 ways they're going to be able to solve this problem. It's going to be to spend less, which is basically what they're trying to do with different types of government cuts on, and the big beautiful bill passing cuts on different types of Medicaid, Medicare, fraud, waste, and abuse, and other cuts on different government programs. Or they can earn more, which is basically going to be via 2 ways, via taxes from current people in the US or tariffs from imported goods that come in, right? And if you look at a lot of the actions that the current Trump administration is taking, right, they're lowering the taxes of a lot of different things, from corporations to people in the working class and everything, right? And it's not really an apples to apples comparison to see if just lowering taxes is going to necessarily mean more or less tax revenue coming in, because when you lower taxes, right, you're going to encourage corporations, businesses, and people that are self-employed to spend more money on things like products for their business, services for their business, employees, etc., right? So even though the government might be, say, taking a less of a percentage, they might be getting a less of a percentage of a bigger number. So we don't necessarily know exactly how it's going to turn out until we see everything play out until the end. So some of the new tax reform that's going to affect the everyday person is going to be the new car interest tax deductible loan that you can be able to take, right? So if you get a new car that's based in the US, you can deduct up to $10,000 of that car interest for the year. And this is going to be active from 2025 all the way until 2028. Another impactful one is going to be tipped income. So if you make under 150,000 for the year, you're going to be able to deduct up to 25,000 in terms of total income. So you're going to be able to save a decent amount of federal income tax and state taxes, right? And also, active from 2025 to 2028 is going to be overtime income. So if you make under 100,000, you don't have to pay tax on 25,000 of that overtime income. So that's great if you actually get increases in overtime, and also you get pay increases in overtime. You're going to be able to save a decent amount of money by being able to basically not pay taxes on that amount. And one unique thing is the Tax Cut and Jobs Act actually got extended and prolonged, right? So now you're actually going to have lower tax brackets overall, extending past all the way to next year, right? Before it was supposed to increase next year, but now the Tax Cut and Jobs Act got extended. You're going to have lower marginal tax rates and lower progressive tax rates. And I'm going to go into what exactly I mean by that. If we look at for single filers what it looks like, right? So if you are basically making 12,000 or less, so you're only going to have to pay 10% of taxes on that 12,000 approximately, right? But if you make 12 to 50,000, you're going to be paying 12% on that 12 to 50,000. And if you make essentially 50,000 all the way up to 100,000, you're going to have to pay 22%. So what does this actually look like as an example? Because I know sometimes people get confused with this and how this actually works. So I want to show you an example on how to work for someone making 60,000 a year and try to make it as simple as possible for you guys. So now with this example of 60,000, right? The standard deduction approximately for 2026 would be about $16,000, right? So you're going to be paying taxes on 44,000. So the first 10% is going to be 12,400 times 10. That's going to be $1,240 that you're going to be paying in taxes. Now for the next 12% that you're going to be paying is now going to be on 31,600 because you already paid on the first 12,400, right? That's going to be $3,792 that you're going to be paying taxes on. And this is just federal income tax. This doesn't include state tax, Social Security tax, Medicare taxes. So there's other taxes you have to pay, but this is just federal income taxes and what would come out of your check based on that. So that's a total of $5,032 that you're going to be paying in total federal income taxes. Now, the last thing I want to end on is something that a lot of people ask me questions about in terms of real estate depreciation and how that exactly works and what's happening in terms of changes. So if you're business minded, make sure you watch this snippet of what I'm talking about because it's going to be very beneficial for you in terms of lowering your tax bill. So Donald Trump basically made 100% bonus depreciation permanent, right? So now, rather than it being 40% what it was before, now it's 100%. And I'm going to elaborate what I mean by that. So let's say, for example, you buy a $1 million real estate property, right? If you have real estate professional status, you'll be able to accelerate that depreciation and basically be able to write off a majority of your tax bill. So the way that works is if you have $1 million property, typically speaking, it's 27 years in terms of what you could depreciate over time. But if you have real estate professional status, what you'll be able to do is do an accelerated depreciation, like using like a cost segregation study, where you could accelerate that depreciation within a 5, 7, or 15-year period, right? So, for example, rather than separating it to 27 years, you can accelerate into 5 years. So what is 1 million divided by 5? That's 200,000. So if you buy that $1 million property, you're able to deduct 200,000 from your tax bill year after year after year. And if you're a high income earner, you're going to be able to save a significant amount of taxes, and it's going to make a big difference in terms of the total amount of money you're going to be able to keep, right? And when you're making money, it's not always about how much you make, it's about how much you keep at the end of the day. If you found this content valuable, make sure you like, comment, and subscribe. And if you're looking for someone to work with in the financial services space to help you with your finances, I've been in the life, health, and retirement space for over 8 years now. And I constantly keep myself up to date on what's happening in the current economic environment. So if you're looking for an insurance advisor that's up to date on these things and can help position you in retirement in the future in the right way, feel free to book a free discovery call. It's free and you could talk to me directly. So until then, see you guys next time and have a good one.